Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
The search for a Treasury chief turns into disarray. A fuming president-elect widens his search. Leaning on Zelensky, Ukraine's allies push to find a way to end the war. And all of that ahead of a big earnings week. NVIDIA and retailers' report cards, those are on deck. Good morning, Manus.
Danny, good morning. NVIDIA not as dependent on China as it was just a couple of years ago under Trump 1. Stocks clawing their way back into the green. S&P lost 1.3% last week. The Nasdaq was down 2.4%. NVIDIA will define the next leg of the tech move. It's the biggest weekly loss since September. We've given back 50% of that Trump Wave 1 euphoria in markets. Roll it over, have a look at the bond market. We touched 4.5% on Friday. We kissed it, and then the real money came in and went, we'll have a bit of that. December is now down to a 50-50 toss-up. You've got Susan Collins saying, basically intimating December is not a lock. We're struggling for a North Star. I like that line from Ed Al-Husseini over at Columbia. We're struggling for a North Star in the bond market, but they got to 450 and they went, nah, we're not having any more of that at the moment.
I think maybe this market's next star is who is Treasury Secretary. I think that will define a lot of whether this, so-called Trump trade can continue on. The fear at this moment is, do you get someone who's more amenable to tariffs and is less market friendly? I think Connor Sen of Bloomberg Opinion put it really well. It'll be almost a test as to whether what's more important for Trump, to keep equity market gains going or to get his tariffs enacted.
Well, we know that he likes to be able to say, how's your 401k, and to keep equity markets going. But then again, I like what Terry Haynes had to say, which was the market learned a lot about having Janet Yellen. Janet Yellen didn't have the ability to, as a way, compress the inflationary policies of Biden. But of course, some of the names that are out there at the moment, Mark Rowan, Bill Hagerty,
And Kevin Warsh is in there, who, by the way, has written many op-eds arguing for free trade. So that would kind of be a shocker if it is him.
Possibly. And then Lighthizer. Although Lighthizer seemed, again, the narrative seems to be Lighthizer will come back in a trade reincarnation.
Yeah. Again, so much to still play for, Manus.
Indeed. Our next guest writes this about the dollar because it's been on fire. The dollar, I still remain bullish for the short term. And I think the euro-dollar will reach parity in the near future. This is driven by the expectation of more growth in the US, higher inflation, less rate cuts for the Fed. A trifecta, if you count it up. Sonja Marten is the head of FX and monetary policy over at DZ Bank. 7 weeks in a row, the dollar has been up. Best winning streak since February. It's as if somebody started pulling, you know the old vacuum cleaners, you just rip it and it just sucks in the capital flow to the dollar. Is that still strong and holds right the way through the end of the year into 2025? Sonja, good morning.
Good morning. Well, we have already moved quite a long way. And I think, as you just mentioned, a lot will now depend on the appointment of the finance minister, because that really is going to set the tone with regards to fiscal spending, but also with regards to tariffs. So I think a lot will depend on this. If you get someone like Lighthizer, people would conclude that this means immediate tariffs, and that would probably accelerate the upward move in the US dollar. If you get someone more moderate, the market may take a little bit of a breather. But I think the euro dollar narrative pointing towards parity in the next weeks or months is very compelling, and from the dollar side and from the European side. So I feel this is really the only way to go at the moment.
Even Chair Powell, though, in his last speech last week, Sonja, basically said that if we do get some sort of tariff policy or any sort of fiscal policy that they'll have to react to, the evidence of it, the economic impact won't be until 2026 or 2027. I wonder how you sort of see the order of things, if there are tariffs, of how quickly it could turn this market.
Well, with regards to inflation, the impact of tariffs is pretty much immediate. If Trump decides to lift tariffs or raise tariffs, that's going to have an impact on inflation almost right away. So we're going to get an inflationary surge when that happens. As far as the growth outlook is concerned, with tariffs up in the air already as a perspective, you may see some boost to growth because people are sort of trying to preempt or front run the tariffs. When the tariffs come in the US through the inflation, you're going to get a hit on consumption, but that's going to take a little while longer to play out. So the most immediate impact is on inflation when the tariffs come, and that, if the tariffs are broad and high, will have obviously consequences for the Fed. And I think they're going to cut as long as they can, and when tariffs become reality, they'll have to stop.
And this is the risk for the market, Sonja, which is this is a structurally different economy and market to that of 2016, and we're talking about potentially universal tariffs. So this all builds for the plausibility of a pause.
Yes, I think that the Fed will the window for the Fed will just close at some point. I mean, obviously, we all know that Trump will be in favor of more rate cuts, and so he'll be happy with the Fed for the time being. He won't be very happy when the inflation rises and the Fed stops cutting, but that's due to his own policy. And then, of course, the focus of the market at this point will then also shift to 2026 when Powell, will basically have to step down and will be replaced, and that's going to open a whole new can of worms. So longer term, there are certainly risks to the dollar from this side of the equation. But I think on the short-term view, it's looking like a very, very solid basis for further appreciation.
Sonja, is there any reason at all to be bullish euro?
No, no, there really isn't. And I can say this standing in Frankfurt. No, there really isn't. I mean, we have already seen a lot of discussion in the market about the impact, the negative impact of Trump's policies on the European economy. And particularly in Germany, we're already struggling. We're going to have another weak year next year. So there's really nothing positive. And then we have political uncertainties. We have a new election coming up in Germany early next year. We have a government in France, which is looking fragile. So things are not looking great here. So I think contrary to 2017, we're not going to have a solid euro against the US dollar. We're going to have a weak euro and a strong dollar, and that's why we think parity is very likely. And once we're there, I don't think we're going to see a quick rebound.
We are treading water at this 105, 105.62 is where we are at the moment. When that dam goes, that psychological dam goes of 105, how quickly and how virulent can it be?
Well, I mean, we saw the first reaction, which I would say was moderately aggressive. I mean, the market was already primed for a Trump victory. It wasn't the huge surprise that it was in 2016. So I think what's going to happen is, once, the narrative has established itself, we get the, dollar positive narrative, we get a euro negative narrative, and it's just going to, sort of keep jumping down a little bit, stabilize, go down. I don't necessarily think we're going to get this massive rout. If we did, we'd probably look at sub-parity levels at this point. So I think it's just going to be a steady narrative of dollar strength and euro weakness that's going to take us down there. Most likely, we're going to undershoot that target at some point as well. So I think that's the more likely scenario.
Sonja, could we have, if we have a scenario where the Fed is pausing and financial conditions are getting tighter with a stronger dollar and the ECB needing to cut in response to that, and then again, you get this loop that kind of goes over and over of widening rate differentials. What could that look like next year and beyond?
Well, I think that is the big question for next year, sort of especially looking to the second half of the year. We have the story that the ECB will be cutting rates at a point when the Fed has already stopped. That is part of the euro-dollar negative narrative right now. At the same time, let's not forget, there is a flip side to the trade tariff coin here. The Eurozone isn't gonna not do anything. They will respond to tariffs, and those tariffs, when they lift it in the Eurozone, will also have an impact on inflation. Probably very moderate, given that growth is very weak, but it's not going to be a one-way street all the way.
Sonja, we really appreciate your time this morning. Thank you for kicking off the week with us. Sonja Marten of DZ Bank. Okay, let's get to some other top stories that are trending on your terminal this morning. HSBC has asked hundreds of managers to reapply for jobs in its corporate and institutional banking division. That's part of the CEO's revamp. The British bank will begin to dismiss several hundred managing directors and other senior bankers in the coming weeks.
Goldman Sachs is predicting gold will rally to a record in 2025, with analysts reiterating the target, $3,000 an ounce. That's by next December. The driver of the forecast is higher demand from central banks and possible escalating trade tensions.
President-elect Trump's transition team has told advisors that they plan to ease U.S. rules for self-driving cars. Current federal rules pose significant roadblocks for companies looking to deploy autonomous vehicles. Past efforts to come up with federal legislation to regulate them have stumbled, but now Elon is on Team Trump.
Coming up, Trump's pick for Treasury Secretary is getting more complicated, to say the least. More runners and riders for the role. That's next.
And another 5 to 10% pullback in stocks may have begun. That's according to RBC's Lori Calvasina. She's going to be joining us later this hour. Do not miss that conversation on your Bloomberg Brief. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. President-elect Donald Trump's next administration continues to take shape. Picks for press secretary, energy secretary, and FCC have been announced since Friday morning. But notably, what has not been announced is Treasury Secretary. Over the weekend, fantastic reporting from the Bloomberg team. Instead of narrowing the search to a final candidate, the search fell into disarray. And the former president is reportedly getting irritated at the jockeying going on, not just behind the scenes, but spilling out into public view, too. Let's get to our reporter on the story. It is Bloomberg's chief political correspondent, Anne-Marie Hordern. Anne-Marie, how did this happen? There was a moment where it seemed like Scott Bessent was the clear frontrunner. This morning, it seems like it's anyone's game.
Well, it was Scott Bessent and Howard Lutnick, both vying for the job. And the issue has become the tension between the two, the tension around the Trump team. It's become so untenable that they're seeing that it's become visibly frustrating for President-elect Trump. So they're starting to add some names into this, like Apollo's Mark Rowan, Kevin Warsh, also hearing the likes of Lighthizer might be back in the mix. So potentially there's going to be a longer menu available to President-elect if this situation and frustration continues. Although we know and we've reported that they are looking for potentially another position for Howard Lutnick, and that would maybe be one of these fancy, exciting ambassadorship positions. He's an individual that raised a lot of money for President-elect Trump at the very end of the campaign. Something else, though, that came to light over the weekend and maybe would dim his chances of vying for the top Treasury post is that this is an individual that also gave to Hillary Clinton in 2016 and also to Kamala Harris when she was running for her Senate seat.
Well, certainly there was fury on Saturday morning with Elon Musk's tweet about Bessent is business as usual. And you go to the end of that tweet, driving America bankrupt, so we need a change. It's interesting how he focuses on the bankruptcy. But in terms of the other names that are out there, the market seems to really like Bessent because of his cognizance and his understanding of debt. When you look at the other names in the story, Mark Rowan, Bill Hegarty, Kevin Warsh. Now, Kevin Warsh is where it could get a little bit more interesting. So it's a policy of appeasement for Lutnick. Then who are these? Are these other names, in your words, dark horses or real possibilities?
I think at the moment they're dark horses, but you could see the team is trying to expand out the search of potentially who could become the Treasury Secretary if this tension just becomes unavoidable between these two individuals. So they are looking for other names. Potentially also Scott Bessent could go somewhere else in terms of economic advisory to the president. He's been with him on the campaign trail. Another name we heard yesterday is Peter Navarro, who is a trade skeptic, very different than a Kevin Warsh, maybe at Treasury. So you almost see two different camps vying for this. Those that really want the tariffs to go up and the walls to go up, and those that are a little bit want to take it maybe more in a judicious approach. Wall Street Journal editorial this morning is saying that Elon Musk should stay out of this. To your point about his tweet, he was responding to Kyle Bass, who said that, who's going to be joining us on Surveillance a little bit later today, and he was talking about the fact that he thinks Scott Bessent is eminently more qualified than Howard Lutnick, and I think that's the issue with this story. It's now no longer just tension at Mar-a-Lago. It's now expanding into the public sphere. And for that, for President-elect Donald Trump, is something he doesn't want to see.
I mean, that's why this next 4 years is going to be so interesting in how it's truth or tweet or whatever, which, by the way, Elon Musk tweeted overnight, basically, who would be better at Fed policy, Federal Reserve Chair, an 8-ball, and everyone voted the 8-ball. Well,
the problem is this is really messy, but it's not messy for a position that doesn't have as much consequence. This is a really consequential, important job. $28 trillion of debt. This is the world's leading U.S., their currency, the dollar is the world leading currency. This is an incredibly important job, especially for a president that uses the stock market, as Jonathan Farrell's always talked about, as a check and balance on his policy proposals.
Well, Liberty Energy's up 48% in the pre-market on the back of Chris Wright being nominated for Energy Secretary. So it does matter to stock valuations. Anne-Marie, thank you very much. Great reporting, you and the team, over the weekend. Our very own Anne-Marie Hordern. Staying with geopolitics after nearly 1,000 days of fighting, Ukraine's allies are increasingly leaning on President Zelensky to consider new ways to negotiate with Russia's President Putin to bring an end to the war. Let's bring in our own Bloomberg opinion writer, Mark Champion. Mark, good morning to you. We know that German Chancellor Olaf Scholz held a call with Putin on Friday, and various quarters have derided that. The French President Macron says he would speak to Putin, but when the time is right. So this pressure is mounting on Zelensky. Obviously, there's moves over the weekend from the Americans in regards to military aid. But ahead of a Trump re-entering the White House, this pressure is mounting. And the question is, how strong are Zelensky's bargaining chips?
Well, Zelensky's not in a very strong position. On the other hand, I think what we're seeing, he described it as opening a Pandora's box. And I think that is probably more accurate than a kind of concerted mounting pressure. What you've seen is Olaf Scholz, the German chancellor, who's very much in trouble at home. This was really a domestic political move. He was going, he opened up a phone call to Putin to sort of, give himself some international standing as he faces, elections that are going to be coming at home. And he's not in a very good spot. Even his own party is thinking about replacing him. And he's certainly not the guy who is going to negotiate the peace. The other one who's kind of an early mover is the Turkish president, Recep Tayyip Erdogan. He's always been, trying to, push a negotiated solution. He was the guy who did successfully negotiate a grain deal for Ukraine earlier in the war. So he has started to sort of talk. But otherwise, it's more of a mixed picture. I think what's basically happened is that the election of Donald Trump has opened the gates for different people to start positioning. And that is worrying for Zelensky, not because he's not looking for an end to the war himself. He said that he wants that to happen next year. What's really at issue here is that he and various of his stronger allies in Europe, they want to see a negotiation begin once he's in a better position, once in the battlefield, once President Putin doesn't feel like he's got nothing to lose by continuing until Ukraine and its allies capitulate.
Well, on sort of the idea of trying to be in as strong as a position as possible when Trump comes into office, there does seem to be the Biden team in Ukraine trying to do the same. Reporting indicates that the U.S. is nearing a decision to let Ukraine hit some targets in Russia, providing more of those missiles. How would this change the dynamic?
Right. I mean, the bigger, thing that the Biden administration is doing is pushing through all of the funding that they have available in the last few months of the year. So we're talking about roughly $1.5 billion a month that are going to be going through to Ukraine. That's considerably more than has been happening, in recent times. Then, as you mentioned, it looks like the Biden administration has now finally lifted restrictions, some of the restrictions on Ukraine's use of ATACMS missiles. These are kind of mid-range ballistic missiles. They'll, depending on the model, between a range of 100 and 190 miles. They are very sophisticated, powerful weapons, but they are not game changers for the war. And it's more a kind of an acknowledgement that President Putin has already, conducted the kind of escalation that the U.S. was worried that it would conduct if they deployed the ATACMS. So there are now North Korean troops in the field fighting for Russia against Ukraine. There are now North Korean similar mid-range missiles that the North Koreans have provided, plus the Iranians have provided some 360 mid-range ballistic missiles, according to Western intelligence sources. They're not yet being used on the field, but they have been delivered.
Yeah, it's this real fear of a growing axis between Iran, Russia, and North Korea. Mark, thank you so much. That is Bloomberg opinion writer Mark Champion. Okay, coming up, Netflix finds its halftime superstar. More on who's going to be performing in its NFL debut game on this Christmas. We're going to have that coming up on your front pages on your brief. Let's get you your front page news, a look at what's making headlines around the world. We start with this on the Wall Street Journal, that investors are betting on a melt-up. They have flocked to stock funds at a pace that is only its second most in history, going back to data from 2008. Many investors said that optimism is being driven by expectations of lower taxes and fewer regulation during Trump's second term.
Next up, Washington Post leads with President-elect Donald Trump. He's chosen Brendan Carr as the SEC chair. Carr has served at the agency since 2012. Carr's priorities include reining in big tech and unleashing economic growth.
And Manis, we have this one on the Bloomberg terminal, a very important story that Beyonce will be headlining the halftime show in Netflix's NFL debut this Christmas. Of course, the Houston Texans will be playing because it's Beyonce. But this all really goes to Netflix's push for live events.
Yeah.
And they had their boxing match between Jake Paul and Mike Tyson on Friday. And I said I wouldn't watch it because I hated the idea of it. And I watched it, and I'm so upset I did. It was the saddest thing I've ever seen, Manis.
And a lot of the reviews have been pretty sad. This is all about trying to get Netflix up to 10 million viewers. I mean, Tyson, 97, we look at some of the data, 97 punches across the whole fight, and only 18 of them landed. Even Magic Johnson said he had to switch off the fight. He said this fight tonight was not great boxing.
No, it was, look, like there was a point where you could see Jake Paul just kind of stopped, and he even said this in post interviews of the fight, just being like, I didn't want to knock out this legend. It was, honestly, it was really sad and an abomination. Anyway, coming up, we're going to talk stocks with Lori Calvasina. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manis Cranny. Let's set your agenda.
The search for a Treasury chief turns into disarray. A fuming president-elect widens his search. Leaning on Zelensky, Ukraine's allies push to find a way to end the war. And all of that ahead of a big earnings week for Nvidia and the retailers on your report card this week.
That's probably the biggest event of the week is Nvidia after the bell on Wednesday. Meanwhile, it is quiet after a decline of 2% last week, erasing 60% of the post-election gains. Your future session is moving higher, led by tech and Russell 2000. We're going to sit down with Lori Calvasina from RBC in just a moment, who says the drawdown might be starting. Meanwhile, for this bond market, we ended the week pricing in more hawkish policy. 13.5 basis points higher for your 10-year yield. We're up by 2 basis points. 4.45 is where we stand. And the euro finally showing just a touch of strength, Manis, but for the most part, it has been dollar strength, a one-year high, with Sonja Marten at DZ Bank saying parity is on its way.
Yeah, it's not a question of if, it's a question of when. And if we break that 105 level, we are all the way to the lower side.
Yeah, and I think maybe if we get a Treasury Secretary who ends up being more hawkish on tariffs, that could be the very thing that gets us there.
What can spook us on the tariff side?
Yep. Meanwhile, that's what equity markets are looking at. As you saw, futures are moving higher, but last week declined 2% for the S&P 500. RBC's Lori Calvasina writing this. Over the past week, we've become increasingly convinced that the S&P 500 may have already begun to experience another 5 to 10% drawdown or garden variety pullback. Pleased to say Lori joins us now. She's head of U.S. equity strategy at RBC. So, Lori, what have you seen that's leading you to see that the pullback is starting?
So, look, you know, we've looked at our valuation work. We've been getting a ton of questions on this. And it's not that we've necessarily hit the exact tip top, and I'm not going to go through all the models, but there just isn't a lot of room. And one of the models we do rely on pretty heavily has been saying all along that fair value for the S&P 500 at the end of the year is about 5,400. And I can sort of stretch that math to maybe like 5,600. You know, if I play around with the assumptions, but that has been bothering me, frankly. If you look at the second thing, it's going back to early October. We saw a couple times in October AAII net bulls move to 1 standard deviation above the long-term average on the 4-week average, and a signal like that has preceded every 5 to 10% drawdown we've had post the 2022 lows. And then you look at the CFTC data, which we got the update on Friday, and U.S. equity futures positioning just continues to surge. And small caps are a good barometer in here, and they've already been at the 2016 highs the last time we got a big Trump trade there. And so we just look at all this data and we say, we just don't have the capacity to absorb bad news. Then I went out and started talking to clients last week, and I just sensed really, you know, just kind of a chill in the air and a little bit of fatigue. I think people are finally starting to pay attention to the fact that earnings are lackluster. The post-election commentary has been mostly focused on tariffs, which equity investors have some indigestion over. So it just feels like it's time to have this breather, and we've already moved down, you know, pretty low.
Well, there was a breathlessness to this. There's no doubt about it. And the small caps up 8%, and they've given quite a lot of that back. We'll come back. I'm sure Danny will come back to small caps. You talk about there's not much room for ability to absorb bad news.
Right.
But you do say that the trigger to that bad news will be what happens with yield. And this has been the conversation that we've all been having. We kissed 4.5, real money came in. You say we can still probably tolerate something up to 5?
I think that when you, technically, I think you can based on the data. And so I look at my earnings yield gap model, which is down at minus 0.5%. And so we tack on another 50 basis points to the 10-year yield, even if I don't move the PE. That is going to take us into a range where my back test tells me that on both a 6 and 12-month forward basis, stocks tend to be down. And right now, the range we're in, 0 to minus 1%, we are typically up on a 6 and 12-month time frame. So we've been watching that model really, really closely, and it's been telling us that we can tolerate a little bit more.
Right.
But if I go back to last fall, when people started to throw out that 5% number, that's when markets really started to get nervous, and we did see about a 10% drawdown last fall. So I think that is really the ultimate thing. And, you know, there's all this stuff going on in politics with the picks, all the tariff discussion again. The reality is whether, you know, it's 10-year yields moving up or people starting to worry a bit about the Fed. When the interest rate vice starts to squeeze, all that other negative stuff seems to matter a bit more.
Well, we are in that season where people start to give their 2025 calls. We had Mike Wilson's, his is 6,500, up about 11%. Lori, can you even think about 2025? How do you even build a model for what that might look like?
You know, look, I will say we did a big piece at mid-year, and we've updated a lot of those models since then. And, you know, AAII net bulls are showing short-term pressure, but not 12-month pressure. Again, we're watching that yield gap model. It's still okay for now. And my valuation work, while it's been, you know, sort of putting the brakes on our thoughts for this year, it has been pointing to kind of a range of 6,200, 6,500 for next year. So you can do the math, but there is a lot out there that's highly uncertain. And I think what makes me a little bit nervous at this particular moment is I do see this case for a pullback in the short term. And when you're putting all these targets together, you have to pick a starting point. So, you know, I'm going to defend the strategy community a little bit here. Pay attention to their math. Pay a little bit less attention to those absolute numbers, because we do have to adjust models continuously based on new information that comes in. That is a reasonable thing to do, and based again on these starting points and where we end up on December 31st.
Right, so you're going to be burning a lot of midnight oil through 2025 with adjustments, tweets, and various communications. The dollar's at a 2-year high. To a certain extent, some of these bigger industrial companies have considered tariffs, and there's been a bit of a drawdown. But you warn on earnings per share revisions, specifically in the industrials and materials. There's no way of really getting ahead of what the tariffs will be.
Yeah, right. And I think if you sort of think about these macro wins, I don't know if they're tailwinds or headwinds, mostly headwinds, right? But just on the 10-year and the dollar coming out of Trump, those reverberate. They have ripple effects in equities. And on the 10-year yield, that's really an impact on valuation for the most part. If you look at the dollar, that's an impact on earnings revisions. And we've seen very clearly over the past few decades, I'm not even talking about the past few years, you get a stronger dollar year over year, you tend to get downward revisions to earnings forecasts. And where we see it most acutely on the sectors are some of the trade war sensitive areas, so things like industrials and materials, also areas like healthcare, consumer staples. It's pretty much every sector, frankly, except REITs and utilities. So I think we have to really watch out for that going forward as well.
It used to be, before politics was the focus, that NVIDIA earnings could be the thing that kind of excites all the bulls again. We're going to get their earnings after the bell on Wednesday. Does NVIDIA still possess that power for this overall market?
So the way we look at it is we look at earnings sentiment and the top 10 names in the market relative to the rest of the market, just the rate of upward revisions. And it's ebbed and flowed a little bit, but generally the story is the last year and a half, you've had much, much stronger upward revision trends in those top 10 names. And it's not that things have been terrible in the rest of the market, but you've just had this earnings dominance. And I'm still seeing that on the data right now. And it's funny, whenever we go through reporting season, the financials come in and that gap narrows a bit, and then we kind of get back to reality. And I feel like before some of these big names print, we always have that moment of nervousness. And even if that gap on the sentiment gauge narrows a little bit, then you kind of get away from the reports and people, you know, play around with their models, and magically that earnings dominance comes back.
You've consistently said each time that you come in that growth is more important to you than the rates narrative from the Fed. We seem to be building this pause or this optionality for the Federal Reserve. Let's see how that goes. But growth remains strong so long as the fiscal policy comes first in the horse before the cart?
So I think you want to pay attention to both, but we do really focus on that GDP environment. 0 to 2% tends to be rather weak for equities. And if you look at 2 to 4%, that tends to really be the sweet spot. And so we've got 2025 forecasts right now that are a touch below that, but we have seen economists tend to underestimate the economy. So that is something I think is going to be very tricky for all of us to navigate this year. Is it a cool economy? Is it a hot economy? We've got to get a little bit more information on that. But I will tell you, man, Janice, I feel like it's too late in the year to be Groundhog's Day. But I am really, really tired of this, that we take the Fed, we see investors jack up their Fed expectations in terms of how many cuts and how dovish they're going to be. Then we get to an expensive place in markets and sentiment gets frothy, and we say, oh, no, they're not going to do quite that much. And we got to dial it down. We have a little pullback. We've really seen small caps, endure the brunt of this. But we're just doing it again. And I'm a little annoyed because I thought we were past this after August. And somehow they just keep sucking us back in.
Well, to be fair, this is the point that Danny's made consistently about the debt and the debt coverage in terms of the small caps and the ability to do it. Laurie, great to get a garden market variety kind of pulled down. Maybe we get another drawback. Maybe we get an opportunity to step in. Laurie Calvasina joining us this morning from RBC Capital Markets. Coming up, Trump's pick for Treasury Secretary. It's getting a little bit more complicated. We'll run you through who's on the slate. That's next.
And we're live from Rio as world leaders gather in Brazil for the G20 summit. Beautiful pictures from Rio de Janeiro there. All more to come on your brief.
It's Bloomberg Brief. I'm Menace Craney alongside Danny Berger here in New York. The incoming administration's picks for Press Secretary, Energy Secretary, the FCC, they're all set, but President-elect Trump hasn't picked his Treasury Secretary yet. Over the weekend, instead of narrowing the search for the final candidate, well, it has fallen into disarray. And the former president is reportedly getting irritated. The jockeying going on behind the scenes. Kevin Whitelaw is with us for the very latest. Look, Kevin, this has erupted over the weekend on Twitter, from Elon Musk to understanding what it is that Trump wants, what his advisors want, and what the first buddy wants. So where are we in this panoply of interests?
Well, it really was interesting. It seemed that it had come down to two candidates, Howard Lutnick, the CEO of Cantor Fitzgerald, and Scott Bessent. These were both people that seemed to be in the running, but they kind of got into it a little bit publicly, sort of campaigning for the job, and that seemed to annoy Donald Trump, who doesn't particularly like people sort of to be jockeying publicly for his attention in quite that way. So I do think that it looks like they've widened the search as they try to figure out, and Trump tries to balance what he's looking for. This pick is super important to him. He does measure sort of his own reviews in part on how the market is doing. And obviously a number of his friends and associates are in sort of the broader Wall Street arena. So he understands this pick is important, but he's also torn between wanting someone who's super loyal to him, someone who's going to keep the markets sort of on a clear path, but also someone who's going to bring the kind of change and disruption that he's looking for to the Treasury Department.
Well, and someone like Kevin Warsh, I pulled up this 2010 speech he gave at the New York Association for Business Economics, who basically is arguing for the merits of open and competitive markets and saying if the U.S. doesn't do that, will our quiet be deemed as acceptance by those who push the false promise of protectionism? Just looking at some of these names, I mean, who is realistic, and is Trump prioritizing someone who will be friendly to this market? I mean, this is a huge role for his favorite barometer of what the Dow Jones will do.
Absolutely. All of that's important. But remember, he's also talked a lot about tariffs. He's talked about wanting to really go hard and pursue an aggressive trade policy. And so he's also looking for someone who's going to fit into that broader sort of array of things that he's trying to accomplish. And so I don't think we at this point really have a clear sense, other than to say, so far at least, in the various picks he's had, two things have mattered the most. One is loyalty, and the other is how good they are on television defending his own agenda. And so you are seeing a certain amount of the potential candidates out there in public trying to show how good they are, in theory, at being on television and explaining his picks. As I say, though, this pick is maybe a little different than some of his others because he does care about how the market views this one, and he does care about how sort of his broader associates on Wall Street view it as well.
Yeah, indeed. And the commentary around Bessent perhaps having a little bit more depth of knowledge in terms of volatility. Let's talk about geopolitics as well. Our reporting indicates that the U.S. is nearing a decision to let Ukraine hit some targets in Russia. Obviously, this is a significant departure for Biden. Zelensky's been pushing him for these missiles and the ability to do this for a long time. How significant a departure is this, and what will the ramifications be for the allies around the U.S. with Zelensky?
Yeah, I mean, I think the key word in what you just said was some targets. And I think we are still trying to understand exactly what that's going to mean in terms of the ability for Ukraine to go after some of the sites inside the Russian-held territory from which attacks have been launched into Ukraine, some where the ammo and other weaponry is stored. Ukraine's been very, very anxious to go after this. They think it's going to help sort of defend themselves a little bit. But it's just not clear just how aggressive that's necessarily going to be and what exactly they'll be allowed to do. So it's probably going to make a bit of a difference, probably not the kind of difference that Ukraine was hoping for. And even with all of that, there's only so much that can be done by air power. And I think, unfortunately, we're still in this position where the front line is only moving a little bit. And so far, recently, it's not been in Ukraine's favor.
Kevin, appreciate it. That is Bloomberg's Kevin Whitelaw. Now, elsewhere, world leaders are gathering in Brazil as the G20 kicks off in Rio. Just before the big event, President Biden spoke to President Xi at the APEC summit over the weekend.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. And I think that's vital. These conversations prevent miscalculations, and they ensure the competition between our two countries will not veer into conflict. Be competition, not conflict.
Joining us now is our reporter on the ground in Rio, Bloomberg's David Gura. David, how much power does Biden come to this G20 with, especially in regards to China, when they're going to be dealing with such a different White House in just a few months?
It's evident how reduced that power is and just how many people are trying to meet with President Biden while he's here in Rio. In the past, there would be a ton of bilateral meetings that he'd be having on the sidelines of a summit like this one. We know of very few happening at this point. So this is really kind of a swan song for the president as he makes his way from Peru. He was in the rainforest yesterday. Now he's here in Rio. And, you know, the stock and trade of these events are larger debates about climate change and development goals and trade policy. These are things that may be fading into the horizon here as Donald Trump returns to the White House. So you look at kind of the balance of power here on the ground in Rio as all of this unfolds. And, you know, the folks that people really do want to meet with are President Xi, who is in town as well, and Keir Starmer, the Prime Minister of the United Kingdom, who's here, kind of a newer face on the international scene. And you look at his schedule, or he's likely to meet with many more people. So President Biden is here, kind of re-emphasizing the importance, as he sees it, of multilateralism, of having events like this one, of the United States' leadership role in the world. But of course, what's hanging over all of those conversations is the fact that these world leaders are familiar with the way that Donald Trump governs. There was uncertainty back in 2016 about what a Trump presidency would be like. Safe to say a lot of that uncertainty has evaporated. They've navigated these waters before. Now they're kind of bracing themselves for what that's going to be like and how they're going to have to kind of change the tenor of their relationships, both together and with the United States.
Well, it's interesting, of course, that Xi during that meeting talked about, you know, 4 red lines, but he also said a new Cold War cannot be fought and cannot be won, and containment of China is unwise, undesirable, and will not succeed. To that end, when you look at Biden, he's in this closing months of his presidency. This is a group of nations that are really trying to understand what 2025 will look like. They're not really focused, I would say, too much on Biden or what is his lasting impact on this group.
You listen to what he had to say in Peru before that meeting with President Xi, and there was so much emphasis on the fact that he had kind of reinvigorated this line of communication between Washington and Beijing. Of course, that had fallen fallow when Donald Trump was in the White House the first time, and there were a few diplomatic trips from Biden's cabinet secretaries to Beijing and vice versa, and they had that summit in Woodlands, California, ahead of the APEC summit last year. But they haven't talked a lot. There's still a lot of issues they have to work through. You look at that imprint. Yes, I think that he's made inroads to the extent that he wanted to. Certainly, these are two countries that are competing with one another, but do have more of a cordial relationship than they did when Joe Biden came into the White House. Again, I think that the major issue here is how much is that going to last? And there's a lot of hope, I think, from President Biden that what he's been able to do and those commitments on the issues of fentanyl and sort of other broader national security issues might stay in place when Donald Trump comes into office. But it's quite clear what Donald Trump's rhetoric is when it comes to China. The fact that he wants to levy even more tariffs on that country, what that's going to mean going forward. So I think there's the hope and the dream of Joe Biden here in the last couple of months of his presidency, but this broader awareness of what's really likely to happen here. And I think it's candidly got to be very difficult for him to sort of come to terms with that. This was not the meeting that he was hoping to have here, of course. He was hoping that his Vice President, Kamala Harris, would be elected. And that moment, those 4 years of Donald Trump's presidency would be seen as an aberration, and we'd see this return kind of to the American century and American leadership. Of course, that's not the case. That's not what happened.
Okay, David, hard reporting gig there, but good work. We know you've got a long day ahead of you there. That is David Gura reporting from Rio. Stocks linked to self-driving cars getting a boost this morning. Investors are getting a glimpse of President-elect Trump's policy around the sector. Members of his team have told advisors that they plan to make a federal framework for fully autonomous vehicles one of the Transportation Department's priorities. Craig Trudell is on this story. You just look at Tesla this morning. It's the ferocity in the stock. It's just amazing, up over 8%. This is everything that Elon would have wished for by, I suppose, his ability to lobby for this internally, isn't it, Craig?
Yeah, I mean, this was something that he was extremely explicit about a few weeks ago on Tesla's last earnings call, this idea that he wanted a national framework for approving autonomous vehicles. And that is precisely what we're hearing from sources that the Trump transition team is looking for in a Transportation Department secretary, someone who's going to prioritize that pursuit. I think it's absolutely something that would benefit Tesla. That is clear, but it wouldn't be something that would sort of overnight be a big boost to the company. In part because they don't have an autonomous vehicle ready, and Elon Musk himself has referred to this idea of maybe 2026 or 2027 deploying these cyber cabs, and so. The vehicles that we saw just a few weeks ago when Tesla held an event around this, those were prototypes, and they were running around a Hollywood studio. So this is still very much sort of, science fiction, if you will, at least when it comes to Tesla. But we do have major companies, Waymo, the company owned by Alphabet, that does have autonomous vehicles on the road. They have to have a steering wheel and pedals in them, even if there's not a human at the wheel and at those pedals, because of federal motor vehicle safety standards. And that's what we're talking about here, is really, sort of narrowly trying to, come up with a way to avoid those standards for these autonomous vehicles.
Right, and we know Musk isn't someone who necessarily hits his deadlines. Craig, thank you very much. Bloomberg's Craig Trudell there. We'll take you out with live images from Athens, where the Greek Prime Minister Kyriakos Mitsotakis is speaking with Bloomberg's Francine Lacqua.
One of the tragedies of the crisis was that the banks were essentially forced to sell off their holdings in the markets. I mean, they were forced to do it. They didn't want to do it, but they were forced.
Welcome back to Bloomberg Brief on this Monday morning. Let's get you set up for your trading week. Here's what's ahead. The G20 summit that will be kicking off in Rio de Janeiro with world leaders there through Tuesday. The ruling on President-elect Trump's hush money trial case in New York also taking place on Tuesday. And then the big market event, we're going to get earnings from NVIDIA, Walmart, and Target. Manus, those all coming throughout the week. Yeah, NVIDIA is dipping this morning. Danny, we've got information's report that the Blackwell AI chip design hit a small snag, but they have the same swag on the reporting on Wednesday. Liberty Energy soaring away as President-elect taps CEO Chris Wright for Energy Secretary. And MicroStrategy, well, that's a bet on Bitcoin, isn't it? The cash helps the firm build $26 billion in a Bitcoin Cash. Yep, and those NVIDIA earnings coming on Wednesday. Will it be the market event, moving event that it usually is? This is Bloomberg.